the purpose of today is actually, or maybe the question of today that I try to answer here today is, can we pull this off also in the US? So, no pressure, but, but that would be a question. So what the foundation basically does, and there's a very brief introduction. The foundation, what it does is it writes research IDs, and research groups from all over the world can then subscribe to those and submit a proposal. That proposal will then be reviewed, and if the proposal is passed, they get research money, but more importantly, they get data from audit firms. So they get the data from the audit firms themselves. And that's relatively unique. That doesn't happen a lot. And the research questions that are being asked are research questions that also the industry, or the profession, I should say, have interest in. So that's what that foundation does. But before we turn to that part, I want to introduce you to the panel sitting here, because it's not only that we are going to discuss how it worked, how the foundation worked in the Netherlands. The other purpose is, could this work in the US? And we have a few people that have some experience, at least, with that, and that's Patricia Ledesma and Dan Sunderland. Thank you very much for joining us as well. And Mark Pitcher is here because Mark has experience with actually the data actually provided to him for his research. So that's why Mark is here. Michael is here. Michael de Ridder is here. He's from PwC, and he's one of the big benefactors of this whole initiative. So that's why he's here. And we were so lucky to also find Robert Neckel prepared also to join us in the initiative of the Foundation of Audit Research. So it's not a totally Dutch initiative in that respect, I would say. Okay. So what will be happening now? Each of these members will talk for at most 10 minutes. At most 10 minutes. Then I will ask one question to them, and then we will go on to the next, and then we will open to the audience. So that's the idea. So, Patricia, may I ask you to give your view on, what is your experience with providing data to research groups and they start to work with it? How does it work, and does it work?
Okay. So first, thank you, Jan, and thank you, Robert, for inviting me to be a part of this panel. Before I start, I have to give my disclaimer. My views are only my own. They're not my cats. They're not the PCOV staff. They're not the board members' views either. They might be, but they're not. They don't necessarily reflect those views. They're just strictly my own. I was asked to talk a little bit about the fellowship program and what we have learned from it. The fellowship program at the PCOV was created in 2014, and it was one of the first projects that I started to work on when I joined the PCOV in January of that year, along with a conference that Robert is chairing this October, the research conference that we've had since 2014, actually. Since, by my last count, the fellowship program has resulted in 22 working papers, 8 of which are published or forthcoming in peer-reviewed journals. And in that count, I include papers by staff, because one of my goals, my shadow goals for the fellowship program, was to spur research in-house as well, and shore up the skill sets and capabilities of our staff to move us forward in our mission. So staff also benefited from creating all the processes to not only get access to the data, but in order to be able to analyze it. When I first arrived, staff was constantly frustrated because they only had laptops. They would query a database, go for coffee, and when they came, the laptop had crashed 5 times. And so there was a lot of frustration, and getting the infrastructure ready was a part of the fellowship program. So there were the shadow goals that were to increase our competencies in there. We have derived insights from every paper, but as any of the staff members from regulators in this room can tell you, you do not base a policy on a single paper. You look at the preponderance of evidence, not just a single paper. And so you cannot overreact to a working paper. In that sense, peer review is very beneficial to us because it keeps the authors honest, and it defines the questions better. It defines the boundaries of what we have learned and what we don't know yet. And it doesn't come as any surprise as any paper that is produced in the fellowship program or elsewhere generates many more questions than it answers. But that's the nature of the business we're in. Anyway, so on the tangible impact level, you can see papers from the fellows quoted in the first post-implementation review that we did of auditing standard 1220 for engagement quality review. And that work did not only benefit from the papers themselves, it benefited from the data work that the fellows did and the methodologies they deployed. And so, the guidance of former fellows and academic consultants has been instrumental in moving that work forward. They act almost as peer reviewers for our work. And you probably will see those papers quoted in future standard setting releases more often, right, now that they're maturing. I also want to draw attention to one of the first papers that resulted from the fellowship, a paper that is now published in the Journal of Accounting and Economics that compares the judgments, the assessments of practitioners, both PCAOB inspectors and internal inspections from the firms. Was what I would say a foundational piece, because it relates those findings that we have internally to what academics use in the broader world, accruals, restatements, going concern opinions, etc. And so in that sense, I find it foundational and sort of a good paper for us to refer to. We have derived insights from all of the working papers that we have, but let me just mention a couple of them. One, I think, is one of my favorite ones is probably the paper on materiality by Chowdhury, Merkley, and Schipper, where they show, they document the baseline in practice and show how complex the process of setting materiality is. And it's far from a rule of thumb, which is often discussed as if it was a rule of thumb. It is not. It requires a lot of nuance. I also find in that paper that it's the way they compared materiality across engagements by relating it to the guidance of the firms, the methodology of the firms, is very ingenious, because scaling everything by total assets or some other item in the balance sheets or income statement doesn't make any sense. It's just, it becomes noise. Another paper on internal controls, and I think Gil is hiding somewhere. There he is in the back row. He's a co-author in that paper. Answered the call from a former deputy chief accountant of the SEC who wanted some work to try to determine whether material weaknesses are being properly identified. And the paper, in looking at the data, finds there might be some indications of that, but also, most importantly, what they find is that a lot of what is driving this is a failure to detect the relevant controls. And as you can imagine, from those two stories, very different policy conclusions emerge, right? Finally, I will highlight the paper on quality controls from Daniel Obdio, which is forthcoming in Management Science, which also helped us understand important facts about the baseline in our own data. And he classified Part 2 findings in bottoms up, the ones that are inferred from Part 1 findings, and top-down from the examination of the QC systems. And what he finds that the association of Part 2 findings with audit quality is driven mostly by the bottoms-up type of findings from Part 1 findings. How am I doing on time?
You're doing well.
I'm doing well? Yeah. Is that because I have a War and Peace to read here? So why did we need a fellowship program? I think the board saw it as best practice to have economic analysis in our rulemaking. And the impetus was also driven by the Jobs Act of 2012 that requires the SEC to make a determination whether any additional requirements imposed by the PCAOB should apply to emerging growth companies. The SEC approves PCAOB standards, so in effect, in practice, they're delegating the economic analysis on us. Otherwise, our board would vote the standard, and then they would do the economic analysis and maybe not approve it, which would be a waste of time. Anyway, economic analysis is a relatively new thing to the organization, and so it's been a learning process to be able to, the economics of auditing doesn't really exist as a field. And so you have economists who are trying to grapple and understand auditing. and auditors that are trying to understand how economists talk, and they are trying to meet in the middle. Sometimes the interactions turn out to be funny because they are mediated also by lawyers. So marginal cost was one thing that was discussed in the staff guidance, just to give you a flavor. And this was like my first few months where I thought I'm not smoking the same thing they are. They mentioned marginal cost, and the lawyers were like, "Why are you saying they are negligible?" Okay, use incremental, and then the accountants get upset because incremental cost is a very specific meaning in accounting. so these miscommunications or trying to develop this common language are trying, and on many days, funny on a few. And the final point I want to make regarding this and why we need this is I view this as a necessity for the staff to engage also in peer-reviewed research so they don't become obsolete. You know, it's a way of sparring. It's beyond the quality control that peer review can or cannot be, is the issue of sparring on how you present an argument and how you anticipate questions that you might get from a very specialized audience. Let me say a few words also about the direct and indirect benefits of having the fellowship program. I think beyond the papers, and they can produce papers that we are not able to produce because we have institutional short-term priorities, where there might be inertia, there might be even skill sets that are not adequate for many questions. So they can bring new issues to our attention, methodologies that we're not familiar with, and that's a great thing. And the indirect benefits, there is also something that I want to echo Hall Schroeder, who was in the first panel. On the other end of the fellowship program, when you have papers, we benefit from being able to quote them. And he mentioned, oftentimes internally produced research is discounted less than research produced by others. And so that's a little bit of the case with the fellows, right? Finally, I think it also signals a commitment to evidence-informed policy and that we are taking our data into consideration. The indirect benefits are from the interaction with the researchers. So there is a tangible benefit in the researchers coming and producing a paper, helping us wrangle the data. We'll say a little bit more about that in a little bit. And but help us structure the data, but the interaction with the researchers is extremely valuable. And the way we have set up the fellowship program is the researchers come with their own ideas, and as long as they fit within the general interest of the PCOB, they can go. But we are able to have brainstorming sessions with them, and they are not vested in any of the projects, which is different than having the academic inserted in the project, because then they are part of the group. And so there is a bias that you incur. It's like the in-group perspective versus an outsider perspective. And so having the outsider perspective is very refreshing. Sometimes it keeps the sanity of the staff. So there is that.
May I ask a question, particularly on that? Because Rob brought up this point this morning that for academics, it's not just following the agenda of the regulator, but actually also point the regulator to some issues that they want to.
We're not aware of.
Yeah. And
exactly.
did that happen actually over if you look at the projects that
the ones I mentioned are things where there has been a QC initiative forever and ever, but never any firm work. So that is helpful. Materiality also feeds into QC eventually. Yeah. Internal controls is not something we're currently focused, and so that is out there. It's like there is not necessarily a policy response from us, but I think that the exposure of ideas and the discussion, I think even the firms can react to that sort of finding without us saying, hey, you have to do this. So I personally find it helpful, and a lot of the staff may feel the same, but I cannot attest to that.
No, that's an interesting. That's an interesting point. That indeed it does influence in a way the topics that you are thinking about, right? So
another advantage of having the fellows work at the PCOB is that oftentimes we have very general questions. By being there and brainstorming with the staff, they actually learn of more precisely the multitude of different questions, and that changes a little bit of the way they think about the organization, changes about the way they think about the role of the research. Because when we put out a call for papers, we're like trying to drive those big topics, but they're gigantic topics. Like one that gets specifically on my nerves is data and technology. It's like, let's talk about, can we be more specific than that? Because there is no paper that will address data and technology. It's like the EPA saying we're interested in the environment.
I guess this is all we have time for at this stage. Thank you very much. Yeah. May I ask Dan to give it in?
Thank you very much. And the Dutch, so cut me off as we go through. I was asked by Jan to pose a number of questions that I might want answered. And my creative juices were also stimulated a bit by some very cogent points that Shiva had made in his paper that's distributed around here. Normative and positive, two terms that have great meaning amongst most academics. Yet since I left school in 1982, I have not heard them uttered once. I really mean it, not once in practice. It's a shame that there's such a gap between practice and academia at this point in time. Positive research is important, especially when, in certain parts of the world, not necessarily this continent, we have a wide array of pundits and politicians with little access to substantive data, but a great deal of access to all matters of media, pontificating at length on what regulatory solutions should be for curing the perceived ills of a profession gone rogue. By the way, these are my opinions also. Positive descriptive research is even more important, and is basically irreplaceable to the profession when it serves a strong foundation for further work on topics. Get the facts down first and then jump off on it. Normative research also has a place in the profession because such activity can lead to the creation of tools that result in better implementation of standards and can even, at times, lead to the development of such baseline standards. Certainly over the last several years, regulators and others charged with developing regulations have asked whether standards are getting in the way of development of standards around data analytics and the like. So let's talk about a couple topics. The first topic, and Patricia covered it a little bit, is materiality. Okay. Materiality, this is my favorite topic, or my least favorite, is one of the most critical decisions an auditor makes. It serves as a basis for evaluating errors on the one hand, and it serves as a basis for determining extent of testing on the other. Okay, are the financial statements okay? And how do I test to get to that outcome? The most overused heuristic in the profession might be the contention that 5% of pre-tax income is the best proxy for materiality. It, rightly or wrongly, sits high on the pantheon with a sign that thou shalt not veer from this number. But this is a significant judgment. It's not a rote calculation, and it does and should vary a bunch based on facts and unique circumstances. This 5% heuristic is such a sensitive number that if an engagement team chooses to veer from that very mechanical computation, a consultation must be undertaken. Based on the data over the last 3 years, within my firm, I would estimate that well over 70% of public engagements have consultations relative to materiality. Where are those white charger academics who can actually create, in coordination with firms and regulators, a thoughtful experimental scheme to test whether 5% makes any sense or not? Or a materiality construct that can effectively takes into account quantitative and qualitative variables that are so important to users. And why, from a descriptive perspective, and I wasn't sure whether it was published or not, can't the prestigious academic journals recognize descriptive studies measuring what materiality is in practice, which is what the Chowdhury study is absolutely fundamental to understanding materiality. Get that description out there, because this is based on data that is really good data. There's no data better than what the PCAB has, because it cuts across all firms. Audit evidence. I'm a classicist by trade. My MBA stint at Chicago involved a beginning and intermediate accounting course and a lot of finance and economics. And remember, it was 1980, 1981, 1982. Okay. I came to Touche Ross in 1982 with no idea what auditing was, except for recognition that my daily challenge was to respond to the schoolyard dare of prove it. That's what auditing essentially is. A daily exercise in proving out client assertions, trying to separate the wheat from the chaff through risk assessment and gathering the best evidence you possibly can to get to conclude on whether financial statements are appropriately representative of what went on. Evidence, evidence, evidence. That's what drives us. And in this era of multi-billion-dollar companies processing billions and billions of transactions, an auditing model that relies to a large degree on sampling of detail transactions, 100 or 500, I really don't care if there are a billion transactions, is one that is incredibly outdated. I run people out of my office when the first question they ask me is, how many do I test? We all sit with technology that does allow full populations to be analyzed and parsed so that we can winnow them down to what perhaps are the riskiest transactions. We all sit with complex and non-complex statistical frameworks, and my favorite is box and whiskers, that allow us to actively and thoughtfully participate in this parsing. Yet we're just scraping the surface right now. Data analytics is still, to me, just a phrase. As Patricia said, we just talk about it. Okay? We need to explore all population tools analysis that exist and potentially create new ones to compile a real lexicon of applications. And to do this, we need real live data and real live interactions between academics and practitioners. Financial statements are filled with risks around estimates. Estimates related to goodwill recovery, estimates related to environmental reserves, estimates related to future pension obligations. An auditor needs to garner evidence at a micro level for individual product lines, specified industrial sites or individual employees, and then step back and perform a macro analysis of the evidence compiled. Why not exploit some sort of sophisticated cross-sectional or time series regression analysis either to analyze these things? Or why not exploit exogenous data that can be scraped in some fashion from the web and use it as a predictor for what should exist on the financial statements? There's a lot of talk here, but there's not a lot of action right now. Some might question the reliability of the scraped data or the data that's generated outside a tightly controlled internal control environment, yet it still provides some form of evidence, and perhaps it can be appropriately weighted. Let's figure this out together. Evidence is indeed cumulative. The old audit assurance model, which is still so relevant today, simply states that we need to achieve 95% confidence on each relevant account or assertion. Though through a combination of inherent assurance, testing the operating effectiveness controls, and substantive procedures. When all said and done, though, this is fundamentally a Bayesian construct. You want to build a normative theoretical model of an audit? Start there. I'm going to watch my time.
Yes.
I'll stop.
Okay.
Okay.
May I still ask you a question?
Yes, you certainly may.
So I want to talk a little bit about materiality.
Okay.
You mentioned that 70% of the 70% of the cases, materiality was actually on the consultation.
Yep.
Because there was an issue that they wanted to discuss.
Yep.
And my question would it be conceivable in a US setting that the audit firms, if I was to design a study looking into this consultation process, right, that someone would get access to that data from US audit firms to look at into this consultation process? Would that be conceivable?
If it's up to me, yes.
Okay.
I think that...
Would you promote it?
Yes. I think what you have to do is you just have to scrub the data as tight as you can. Everybody goes through this. But again, the nice stuff that Patricia had was really good data that was anonymized. The consultation process, though, as you all know, is a very qualitative, judgment-driven process that includes all these factors we talked about in the other panels. What other measures are people all the users looking at to figure out where you are from a materiality perspective?
Okay.
So this is really, it's really critical.
Okay, so from now on, you're a promoter of
I'm a promoter. I'm
getting
always a
data
promoter.
out of the audit firms, right? Good to hear. You know, this creates hope. Thank you very much, Dan. Mark, may I ask you?
I started my own stopwatch here, so. So it's a pleasure to be here and talk about some of the auditing research that I've trying to do well. Dan's I was looking at I was eavesdropping on your paper, and his next topic was about fraud. And so I'm going to talk about a study or two that deals with how auditors go about assessing the risk of fraud and the risk of client management engaging in deception. But I wanted to talk about it in the context of what I've been able to do both before my association with FAR through that process that Jan just talked about. And the way this project, these couple projects arose was, I was just minding my own business as an academic, actually. I was reading the literature on auditing, reading the literature, as it happens to have been the case, on earnings conference calls, and fascinating how much information content you see in earnings calls, particularly in the question and answer period. And I know some questions are, staged probably as well. From my anecdotally, I hear about people texting questions ahead of time and stuff like this, but some are not. And sometimes you have an analyst ask management a question, and if management has either knowingly engaged in deception or is very worried about that, one of the things that the literature, before any of my work, would suggest is that management usually experiences cognitive dissonance, and that is an unpleasant, negative, affective feeling. And other researchers before any of my work documented this. And at the same time, what was happening is that the auditing standards, both in the United States but also globally, had begun to recognize that when auditors do risk assessment or audit planning, you can't really do a careful audit risk assessment until you fully understand or deeply understand the client's business. And one of the places you can turn to, we had an equity analyst down here on a panel this morning, is what kinds of questions is the investor community asking? What kind of analyst reports are being written? What types of concerns do you see in business media? And certainly earnings conference calls is one ripe place. I mean, so the issue is, if you're an auditor, even though earnings conference calls are certainly not primarily done for auditors, they're certainly a secondary audience of these calls. You need to probably be paying attention, at least at the audit team level, what's happening in these calls. And, you can talk about we had the term normative invasion from a practitioner. I thought that was great. But you can think about, as a Bayesian auditor, as you listen to a call, to what extent should that be, if you're doing a great job on your engagement, really revising your beliefs? You would hope that as an auditor, you should probably have the ability to anticipate the types of questions that the equity analysts are going to ask. You should sort of know where the soft, underbelly is with this company, where they're at risk. But nonetheless, you still get new questions. And what we basically did in a prior study before the FAR relationship is we were able to take, thanks to my colleagues Mohan and Bill from Duke and my colleague Jessen from Illinois, we were able to take excerpts from real U.S. companies' conference calls, and we took the Q&A sessions, and we successfully recruited, and it's hard to do, and I don't think I had not been at a place like, there are several schools like this, like Illinois, a big place that supplies a lot of accountants to the profession. We're able to get enough audit partners to participate, and we had experimental conditions. So we randomly assigned these partners. So the identification strategy is a little different when you have an experiment, right? You randomly assign partners to listen to different calls, and some of these, the base rate of deception in these calls was artificially high, 50-50, and we told all the participants that. And our concern was that, one of the social psychology literature would suggest that you're not particularly happy to think about someone who is socially close to you engaging in some sort of really bad behavior. So although the auditor is charged with being professionally skeptical, it's also not entirely fun to think about my firm's client is engaging in deception. And so there's a whole line of research about this, not only in auditing, but in economics and psychology, just slightly different words used to denote the same thing. And it's basically your preferences that your client is not engaging in fraudulent behavior, deceptive behavior can cloud your belief revision. And because of that, we thought that, and we had evidence consistent with this in the prior study, that it's going to be a little difficult for partners to see fraud in audit clients, even though in this particular study, with rare exception, were these earnings calls for a client from their audit firm, much less one of their own audit clients. And so what we found in this study is that the base rate capacity of auditors to detect deception was no better than chance partners. And this was not terribly surprising given the research on the detection of deception in human judgment. There's a lot of judges to laymen and women cannot detect deception better than chance. But we implemented a very simple, what we call a cognitive dissonance prompt, where we basically said, oh, by the way, as you think about markers for deception and listen to these Q&A portions of these conference calls, each about 7 minutes in length, be mindful that one correlate, I don't think we use that word, of deception is cognitive dissonance. That is the negative emotion you feel when you think something is untrue or may well be untrue. And that, without increasing the false positives, increased their positive hit rate from slightly below 50%, chance is 50%, to over 70%. So that was really exciting. And that's something you don't really see in the psychology literature. Now, I look at this FAR thing. I see that Robert's associated with FAR, and I hear these wonderful rumors of what's happening in the Netherlands, about how you can potentially get access to data. So the bottom line is, I wrote a proposal with Jessen, and Devin is another professor at Williams at Illinois, and then a doctoral student at Rotterdam, Sebastian Sternkoop. And what we were curious about is, what if we did a couple other things that we couldn't do in this particular study? What if we had auditors listen to earnings calls for their clients? And so we couldn't do that before. And why don't we get auditors of different rank, if we really, really wanted entire members of audit teams. And so what we end up doing in this study is really a field experiment. And when I first thought about experimental research as a doctoral student, I thought it would be a bunch of field experiments, and I quickly learned in my first seminar it's all laboratory experiments, and they have value too, no question. But we end up doing a field experiment where basically well over 140, I think, auditors from the Netherlands participated in either second or third quarter calls. We would gather data, pre-call archival data, a variety of archival data. Devin's helping us with that part. And then they all participate in what looks like to them a survey where we have a 2x2 experimental design. And that, in Shiva's paper, you see a 2x2 matrix. It's basically we have either they're prompted or not to look specifically for fraud, and they're either prompted or not along those cognitive dissonance lines we just talked about. And the thought was, actually prompting auditors to look for fraud on their own clients could do more harm than good because of the aversive nature of the event that I just talked about earlier. Whereas if you talk about looking for cognitive dissonance, you may see in that earnings call for your client markers of concern. Not necessarily out and out evidence of fraud, but something that needs following up on. And besides which, there's just basic data here that, in terms of descriptive data you were talking about. Before this study, I had this, PCAOB standards say we recommend you listen to earnings call to help plan the audit. It's not required. I didn't know how many auditors were listening to these calls in the States, much less the Netherlands. The overall rates, around 60% in our sample, say that they regularly listen to earnings call. That was very, very good news. But if you go, and this probably will not be surprise to the practitioners, but once you go below the senior manager, it's really closer to like 30%. So a lot of the people who are doing the day-to-day field work, and that's not necessarily bad if the senior members of the audit team, tell them what's going on at the client. But once you get to senior manager and above, it's closer to 67 or 70%. I have less than a minute left, but I'll tell you that what we were able to do, we randomly assign those conditions to real-time audits, and we actually asked them questions like, what parts of the call bother you? Does it change your risk assessment? Are you going to change your tests? Are you going to change who you assign? Does it change your opinion of where the most risky areas of the audit are? And then we're also gathering subsequent archival data with respect to things like adjustments and risk assessments and team staffing. I do know we always like two sets of eyes to look at the data analyses, and we've had one set of eyes look at them, so I don't want to talk about the results other than what I've talked about so far. I'm talking about the results, however, in 2 weeks, so we have some work to do before then. But there are some really cool things. I mean, I'll say generally, the dissonance prompt seems to make people more willing to think, yeah, there's something to worry about, whereas the fraud one seems to be making people think, well, surely it couldn't be that here. But it's just a real honor, and really I think of it as just an unbelievable opportunity to do a field experiment. I think you had Ed DeHaan talk about, dabbling in experimentation, and Christian said, is there a way that we can actually think about doing field experiments? And this is one example of one in audit. So thank you.
Thank you very much for that. I got one question.
Sure.
Can you elaborate a little bit on the data collection, how that worked for you? Worked it out well? Or
so
I mean,
so they're very, very careful, as you can imagine. It's very important to gather high quality data. So we do painstaking revisions to surveys. You can think of an experiment. The 2x2 is 4 different versions of a survey. So we're very careful in how you construct a survey. And so if you're not an experimentalist, you need to partner probably with someone who is. There's all kinds of trappings there. But there's also a care that needs to be taken to make absolutely sure that the research team doesn't know that this is either Deloitte or not, or PwC or not, on the engagement of this client or not. So all that needs to be anonymized. So there's a central clearinghouse called Center Data that basically actually administers the survey. We prepared the survey, and then we give it to a third party to administer to the firms. And then once the data are in the can, it's not as though we can just push a button and download it to our machines. There's also a very high level of care that all data analyses have to be done using a secure server with Center Data. And we're using even their version of Stata, or I'm not sure, I think it is Stata. Yeah. So, and then, and so and also there's a Herculean effort to gather these archival data that preceded our project. It's not as though all the data that academics just would whip on a wish list would be sitting there in a can somewhere at the firm. So they had to really pull together a lot of data for other research teams. Thanks a lot.
Okay, thank you very, very much for now, Mark. Michael, may I ask you to give your contribution?
And thank you for participating in that project. I think you did, but of course I don't know which observation is yours.
That's good. To be here. Thank you, Robert. To give you some of the practical aspects of what we have been able to achieve in the Netherlands. I'm an auditor myself, been with PwC for 32 years. After 20 years of basically serving clients, I ended up more in managerial roles, responsible for R&Q in the assurance practice. I became the assurance leader in the Netherlands for PwC. And later on, I became CFO and COO of the Dutch firm. I stepped down basically from the board last year in July. I had a 3-month sabbatical, which was far too short. But as per January 1, I'm the global assurance inspections leader for PwC. So, and that's for me also a very interesting connection to the research and the Foundation for Auditing Research in the Netherlands. Because, I travel around the world with my team, looking at all the quality management systems and all the files all over the world, trying to accumulate data, do root cause analysis, etc. And I mean, the firms are making a lot of effort, and I think over time, if I look back for the last 5 or 6 years, the amount of effort going into root cause analysis and what can we improve has expanded enormously. And I think that as part of that element, getting more academic research in is, from my perspective, incredibly important. And now let me go back a little bit to the Netherlands, because you need to have some background, because if we look in the Dutch society, we have a very strong regulator out there who had been issuing several reports with some decreasing trends. And in the Netherlands, let's say our politicians our, let's say, rather egalitarian society makes that if something goes wrong, everybody will jump onto it. So the reports that were being produced by our regulators really got high-level public attention. Every political party has an opinion. The minister has an opinion. So effectively, all kind of stakeholders popped up that we were not really involved with as audit firms in the past. And effectively, it was in Parliament in April of 2014 that the minister actually said to some of our board members sitting on the balcony in Parliament, you have now a one-time opportunity to get improvement measures in place, otherwise the politicians will do it, and that will not be with surgical precision. That was literally what he said in Parliament. So we did this a little bit under threat. That's what I'm all, no. Just kidding. I mean, what we then did as a profession, we made a steering group with members from all the firms. We went out to public, we did public stakeholder meetings to get input on what people thought about us, how we could improve our performance. And basically, we very clearly concluded there is no silver bullet solution, but we came up with a set of measures, 53 in total. And some of them were pretty far-reaching for as far as we need to separate off a part of our income as partners to be as a kind of a reserve in case of things going wrong and you having been negligible, then you will have to pay a personal fine. That's a very tough measure, at least from, that's from our perception, but also from the public, that was perceived as such. We have independent supervisory boards, just with external members. Our firms are basically being run by these people. And so those are pretty tough measures. But one of the other 53 measures, and so I come to the Foundation for Auditing Research, is let's establish a better working relationship with the academics, because we do a lot of things, but is that really all scientifically grounded? No, that is not the case. So let's set up something of a research institute. That was what we decided, and then the problems, of course, started, because it's not easy to get that off the ground. And one of the big things there is it's easy to fund, and it's basically like the Center of Audit Quality. I mean, the firms can fund something. That's the easy thing of it. The big thing here is, but we promised to make audit research possible on the basis of our data. So we have been struggling for more than 2 years, in all honesty, to get all the clearances, approaches, details of how you actually make data available. Because what I found out about scientists at that moment is, the moment we told us that we're going to make our data available, they turned into a bunch of little children walking around in the candy shop, asking every detail that we had in our house. So that was a bit of a, that didn't really work. So, because first of all, the data are sometimes very deeply stored into audit files, not in a way that you can easily accumulate them. We have personnel files where we need to deliver information from. I mean, loads of information. So at a moment in time, we turned it a little bit around and we said, look, let us tell you in communication the type of data that we would have readily available, and does that help you in doing appropriate research? Because the other way around really was a way where we probably would have still been arguing about what we could and could not deliver. So that is, I think, one of the key elements. And then the other thing is get legal clearance on that we are able to provide these data, because there are also client data in there, there are personal data in there with the GDPR regulations we have in Europe, all very, very difficult. So loads of lawyers from all the firms basically working together to come up with a general scheme for all of us to be able to exchange information. Key element is there, the data should be anonymous. They should not be seen as to become from which firm they would come. That's what you just said, Mark. I mean, and so we've accumulated them all in a database. We do a lot of efforts ourselves on anonymizing, but then we have this Center Data Institute, which basically manages all these data. And we now have a process going whereby a crucial element is communication upfront with the scientists, because if they just deliver a list, this is what we want to have, you get stuck. You really need to work together to talk together about what you can do. And then you have this whole process. This process is now even certified, so that was also one of the requirements from the management of the firms. It needs to have an ISA 3000 certification as to its operation and effectiveness. That is now also in the air. So basically we have a research and data flow now going out to the researchers. But it took us 2 years at least to get there. So, I mean, that was we did not expect that, and it really, it was a big point for us. But now it works, and I think over time we will now see much more of the results becoming public. And effectively, our profession in doing this, I mean, I just give you some of the topics, because how it works is we have a 10-member board. 5 of the board members, amongst them myself, are from the audit firms, and the other 5 are academians. There are 4 in this room, so I'm very well guarded if I'm out in the public by them. And the casting vote, in case of an equal voting, is with the independent chairman. She is also academian, and she is one of the senators of the Dutch Senate. And so what is our role as a profession is much more in discussion with the scientists, say, look guys, these are the topics that we struggle with, where we want to have more information about. Are we doing the right things? What are the positive factors leading to audit quality? What are the negative factors leading to audit quality? What kind of interventions can we do to improve our audit quality? And these are the type of discussions that we're having with the researchers, with the scientists. And then we may basically develop a research agenda. And the research agenda being topics where we would like to have research on. So it's not very, very detailed, because we want also the researchers to be open and having their own thoughts about what they think useful of researching. But just to mention a number of topics, loss of talent, what's the effect on audit quality? What are the features of team success? What are the challenges in group audits? What does the internal control environment and what we do on the internal control environment, how does it influence our work? So that are the broader topics, and then the researchers come in with detailed research proposals. Those research proposals are then first being evaluated by our scientific board members. They rate them, they look at, are they of sufficient level from a scientific perspective? Are the right researchers involved? Do they have a good track record? And then they come to the board with their recommendations as to, look, these are the topics that have been brought forward. These are our recommendations, and then we decide together, on which ones we are going to use. So we are really, from a professional point of view, from the first point of view, we determine topics. We have a pre-selection by the scientists, and then we more or less agree in the end on what are the research topics that we're going to do. And this is the framework we work under. The thing is here, it takes a while, so this is now our 4th year of operation, but in the next conference, I think we'll probably have a lot of research out there being based on facts. And I just want to conclude with one thing, Jan, because you always laugh loudly about this. The cooperation between scientists and practitioners wasn't very well in the past. At least we couldn't see a lot of it. Now it is. And my biggest example is our first conference as a FAR. And we had a presentation from a professor from the US, and he was talking about audit quality. And he did that on the basis of an analysis of accruals in the financial statements of our clients. And I was listening, and I thought, we are so disconnected. And I'm Dutch, so I stood up and said, to me, this is bullshit.
He did that.
I mean, let's be, but it shows you the gap that we had, and I sincerely hope that with whatever we're doing right now, we can get closer and we can make the research more relevant.
Thank you very much, Michael. Also for your openness, also during conferences. I mean, that's great. So I mean, we have to, sometimes you have to challenge people, right? And you have to be provocative. You have to be provocative to do that every now and then. So maybe one question would be, right? I know that it took the audit firms a tremendous effort actually to actually collect the data, because they were not used to that at all. And my question to you would be, would you do it again? Because it has cost your company, your firm, an enormous amount of money.
I think the idea came from 53 measures. An interesting measure is because we see a lack of cooperation. We are very interested in how to improve. When you compare to the airline industry, or all kind of comparisons you can make. But what are we really doing to improve? And we thought that the scientific component could bring us, support and help in achieving that. So from that perspective, we would certainly do it again. We would know more of the pitfalls, but I mean, we would certainly do it again, and I'm very hopeful that, with this initiative, we can get very useful research. Maybe one more comment in relation to that is, gathering data is very interesting. One of the other things that we did, that my firm did as an example, we have our summer school where we have around 1,500 people going to their courses for 2 days in relation to auditing. We actually had scientists from the Maastricht University coming in, doing live experiences with these 1,500 people. So that was for our own people a very interesting experience, because it's a great learning experience. But for the researchers, 1,500 people for a live experiment with data on auditing. I mean, it was also for them, a great thing. So, I mean, I think, and same with your research, if you can do a lot with researching, it makes it more fun for both sides, I would even argue. Thank you.
Thank you for that, Michael. Robert, may I ask you to give your opinion?
Yes. First, thanks, Jan, for including me here, and Peter for organizing this. I think I may be older than you, though, Peter. So I've been doing this a long time. When I got involved with the Foundation for Audit Research, when they first called me and says, "You want to help with this?" I thought they were joking me, because I'm saying, "You mean the entire Dutch audit profession is going to open files to researchers?" That seemed like an impossible dream. Now, I've been doing this a long time, and I've been very fortunate in my career. I was actually in preparation, I went back and did a little inventory on some of my earlier research. Turns out I've had access to proprietary internal data from 7 audit firms in 6 different projects. And not once, ironically, was that data anonymized. Excuse me, I can't say that word. They've never been hidden from me, with one exception, and that was we got audit team data, and they disguised the employees. Other than that, I had access to, and I knew who the clients were that we were looking at. Obviously, the firms were very trusting of their non-disclosure agreement that I signed. To the best of my knowledge, I haven't regretted it. So when this question started to arise about how do you get data to researchers so that they can effectively inform regulation, I'm thinking, well, that's not so hard. I've been able to do it for whatever reason. But then about 10 years ago, I kind of got it hit in the face by a revelation of the real world. I was at a conference in Europe, which I do a lot of, and I was on a panel called A European Perspective on Audit Regulation. Now, I was the only American on the panel, which some people thought that was weird that they had an American on a panel called A European Perspective on Audit Regulation. But anyway, I was also the only academic. And so the other people talked, a couple regulators, a couple standard setters, a couple people from firms, and then I was the last speaker. That seems to be a pattern here, and people make me talk last. And the last speaker was, I don't know how many of you who pay enough attention to auditing, but back in 2008, the European Union issued something called the Green Paper on Audit Regulation. And they proposed a lot of very radical changes to the way auditing profession was to be regulated. Most of those did not come to fruition, although they're coming back in the UK this year, I think, it seems like. Anyway, so one of the speakers was a co-author of the Green Paper. And he gets up, and first of all, his slides were dated 4 years before the conference, so it didn't seem like he'd put a lot of thought in preparing for this particular conference. But his final tagline was the most revealing. He said, "It's not about research, it's about politics," and that they didn't really care what research had to say. That really was an eye-opener for me. So then I started thinking, well, why is that the case? How can people who should know better, I would hope would know better, and should care, get away with that attitude? And I realized one of the things, if not the main obstacle for us in doing meaningful research in this context, is we sometimes just have to step back and say, I don't actually know what I don't know. And that, you think about researchers, we've heard this before about researchers who've had revelations because they got to talk to real world people. And we also heard about some regulators and standard setters who had revelations because they got to talk to academics. And that dialogue is absolutely critical. Not every one of those dialogues is going to lead to projects, but they will often lead to new insights, which in the long run will lead to projects and good research, hopefully. So this morning somebody said, we should do more research on solutions than problems. And that sounds great. I think we can all agree that's probably a good idea. But that is not without its own problems. Because sometimes one is a problem, not a problem. What if our researchers can't even agree on what the problem is? Now, I obviously do audit research. And if you ask me my personal opinion, I'd say long audit firm tenure is not a problem. There's very little evidence to suggest audit quality deteriorates to a significant level because an audit firm has been on the engagement for a long time. And that's what the evidence says. Now, there are, of course, exceptions to that. There are papers that make the other conclusion, but I think they're overwhelmed, numerically at least, by the papers that say it's not. So if we can't agree on whether audit tenure is a problem, how do you figure out what the solution should be? Okay? So that's one issue we have to figure out how to reconcile. Another one is, when do you have a solution that's actually looking for a problem? Right? We have an idea. We want to change the world. I think this is a wonderful idea, peanut butter and jelly, but I don't know how to make it work because I can't see what the problem is. So sometimes we see researchers, I think, who are looking for the problems because they have a solution in mind. And when we start going down those roads where we can't agree on what the problem is and we can't agree that there's even a need for a solution, that's when we run into the dangers of a political environment that trumps economic, behavioral, or operational research and issues. The other thing we should keep in mind, I heard this morning, somebody said it, I forget who it said, science is certain. My wife would actually beg to differ on that statement. My wife, many of you know who know me, my wife is a real scientist in quantum theory. She's the smart one in the house, as she reminds me regularly. Anyway, they have this thing, and you may have heard of it because it gets some public use, called the Heisenberg uncertainty principle, which basically says the more you have to interact with the system to measure the system. And when you interact with the system changes. And so everything she does, even though it's extremely high-level mathematics, is based in fundamental statistical analysis because you have to make some assumptions as to what those system interventions do to the distribution, as she would say, permutations in the system. So we don't have any certain answers. Sometimes we just have to look at the preponderance of evidence. One of our challenges that I like to keep things look at things as simple analogies as possible, maybe too simple sometimes, but I like to keep it simple. And I think about audit researchers trying to do audit research. I say, what's an analogy to that? Well, think about a doctor who's doing medical research, but has no access to patients, no access to clinical trials, and no access to hospitals. How do you do medical research? That's really hard. So if I have no access to auditors, audit teams, right, or clients, how do I do audit research? I run accrual models. That's how I do it. He did say that, by the way. That's an exact quote. I'll never forget that one. And then give him a couple glasses of wine, he'll tell you who the academic was. Anyway, so since we have trouble getting access to really what is the fundamental environment in which we want to do our studies, it literally limits what we can do. Now, the CAQ, to be fair, they give access to experimentalists. I think most of what they do is experimental or survey research. But until FAR came along and until the Research Fellows Program came along at the PCOB, there's been virtually no access to empirical data from within firms, except for me and Dan Simonik, basically, who's at UBC. We were the two people that could, for some reason, get access to data. Now, that's actually created another problem. You might call it simple jealousy, but a lot of academics who haven't had that access get upset because they don't get to do the same kind of stuff. And that's created another type of problem. So one thing I think this is where I'm leading to why this initiative is important, particularly for FAR, is that, medical doctors who do clinical trials, they don't let other researchers into their experiments, into their studies, right? And not when it's going on. But afterwards, through open access data and peer review forums, other researchers are able to come in and look at the same data, maybe even try to address some different questions. And at the JAR conference last week, they had a wonderful session on this whole issue, which I think is becoming more and more important, about replication, or more importantly, reproducibility of accounting or audit research findings. And I think until we can actually let loose the full intellectual power of the academy, we're always going to have these debates as to, is that really what they found, or are they biased? I mean, we will always have those charges. I mean, like I said, I've done studies for 7 different firms. Now, that either makes me the most objective audit researcher there is, or the most biased audit researcher there ever was. Well, you make up your own mind about that. Okay, so as we move through this, then the challenge is, how do we get this data out there? Now, I'll end on a footnote. When I did the very first of my proprietary studies, one of the things we did was we actually tracked the costs. So Michael alluded to this. He's too polite probably to actually, he probably has a number. He probably knows what it costs his firm. But the project we did, we had 350 surveys filled out by audit seniors. Each survey, on average, took 12 hours. Do the math. Whatever the going rate for an audit senior, times 12 hours, times 350. That was not a trivial investment, right? Now, how do we get away with that? Well, because there was 2 things happening in parallel. One was the project that the firm was interested in, and then there was a project I was interested in. And so by having, I hate to use the word quid pro quo because that sounds something biased, but the idea that we could do this in parallel and everybody won, I think, was what made it work. And so as we see these evolve here, I think that's the argument. Everybody's interested. We all have the same interest in audit quality, if that's what the topic is. And so the question is, how do we actually get everybody on the same page? And sometimes it's just simple coordination and communication, right? You have to speak a language that both sides understand, and this has come out obviously from this morning. I will close with an anecdote from my wife's field. She worked in a research team. She's now retired, very happy. She worked in a research team that had 50 people. It had some senior full professors, it had some junior faculty, it had postdocs, it had doctoral students, it had postgraduate and master's students. And everything that came out of that research lab was essentially a product of that team, right? They literally had $100 million of funding to run that. Now, that's science, right? There's a lot more money out there for that. But the point being is, because they could coalesce a team around a well-defined topic, and that the people at the top could talk to the professionals in that field, and could talk to the government people in that field, and be understood, they could essentially bring home the bacon, right? Because you didn't need that postdoc and even that junior professor talking to the people over here. But there has to be a communication channel out there. Now, we're a long way from that. We don't even have postdocs yet. But as we mature, we may see some of these models developing. So I'll finish on that note.
Thank you very much, Robert. In the interest of time, I would like to open up right away now to the.
I don't get a question.
Yeah, from the audience. And otherwise, you get a question from me. Otherwise, you get a question.
I just overwhelmed you, right? I overwhelmed
you. You did. So, who has a question at this point? Yeah, you? Yeah. I'll go there.
So I think what's going on in the Netherlands is a great model and something that we could aspire for in the United States. I am thinking about certain, I guess, proprietary data that might have been abused by researchers in the past. And one example was the internal auditor data. There was like a survey. And what researchers did is they tried to take there was an asset amount or a revenue amount, and they tried to match that into CompuStat to then backfill or try to figure out what company it was. So I guess my question with respect to FAR and how you're doing this, if you're using archival data, you definitely would like to have, I think, clients, actual financial statement information. So how do you maintain proprietary nature of the data or try to scrub it when you also still have to have data potentially that could be matched to public data files?
For you? I don't know. Yeah, it works. So one thing that we do is for instance, if you want to calculate discretionary accruals, right? We would do that as far. And then, to make sure, and then we would also make sure that you could not recognize which firm it is. So that's what we do.
Well, like revenue or assets.
Yeah.
You somehow, so you're doing all those calculations within your organization and then providing it to the researchers?
And then we provide it to the researchers. Yep, that's right.
Well, because that's a real I mean, you're absolutely right, because if you know the industry and you know the relative asset size, you can figure out who the company is, at least for a publicly listed company. Right now, in the Netherlands, some of the data might not be from publicly listed companies, so it may not be quite that simple. But yeah, I mean, I did that on one project, but we got permission from the firm to do it because we needed to do some things, some calculations about accruals and things like that that we decided late in the day we needed to do. But it's that's since every client is unique, scrubbing them of all identifiers is not a trivial problem, and so we'll have to see how that plays out over time. Which is one of the reasons why I think one of the things that Patricia has to challenge, if they want to make this, I mean, I won't take anything away from you, but there have been discussions about trying to make some of the PCOB data available to other than people than fellows, right? Am I getting that right or wrong?
Yeah, there are some discussions around it, but if you anonymize it and you cannot link to outcomes, it becomes
Right, then that's
not very helpful, to say
Right.
the least.
So my comment is actually exactly on this point. So I think we could actually push this a lot further because there are ways in IT, people have started using this for privacy, is basically to create synthetic data sets. And so what people can do is create data sets that basically have exactly the same properties, and you can then do tests on that they will deliver outcomes within a certain margin of error. But the data sets themselves would be synthetic, and as a result of that, they would be, you wouldn't have the real data, and as a result of that, it would basically still be private. So those kind of applications would allow us to do a lot more, and I think we should be looking into these opportunities because I think the privacy concern that firms and auditors have are absolutely legitimate and is very to be taken very seriously. And at the same time, if regulation is costly, we need to figure out, and people often do point out that there's problems with regulation and regulations have unintended consequences. Well, then we all have an incentive to kind of fix these things. And the way to do it would be to bring more research to bear and to trade that off against the privacy concern. I think technology can help us make that do. So there are the schemes that you guys are doing, which are fantastic. But I think, as you said, there's limitations. And so I think using technology, I know the census is, for instance, looking into that to make more census data available to researchers where we have equally sort of these sensitivity or privacy concerns.
So just to add to what Patricia had said about anonymizing the data and not being able to match outcomes, several years ago in the early years of the CAQ, we explored creating some kind of data set that could be made available to researchers based on audit work paper data. Ran into the Rule 301 issue, which we were trying to figure out how to get around. But more importantly, it turned out, not even if we could anonymize, the researchers wanted a longitudinal database, which meant if we had Microsoft or some other company that somewhere along the line had an M&A, you'd be able to reverse engineer whatever, even if we had anonymized it as best as we could, reverse engineer and figure out who the companies were. And that would have created a huge problem, not only for the auditor of that company, but for that company as well.
That makes a lot of sense. Jeff, you had a question? Oh, okay. Sorry. Okay. Then I would like to ask the panel to give some final sentence, and if they have.
I wasn't ready for a final sentence.
Okay, well, it's fine.
It's fine.
Yeah?
I do think that the Dutch model is something that we all should strive for. Data is what we all need to work on. The anonymization of it is something that we all have to work towards. But I think, again, there's been a lot of fruit been recognized from this Dutch venture that I think is going to be very helpful, and I'd love to be able to use it in the U.S. And what the PCB has is a good start relative to things. We just have to work together to get there. And that's a life goal.
No, I'll just say that the most fun I've had on recent projects have been when I've paired up with two generally archival, Mohan, I don't think of as, he's not an experimentalist, neither is Bill, really, from Duke, and it's just been fun to talk about research from both an experimental perspective and then someone in an archival world. Economics is their main theory, and I'm drawing on psychology. So that's been a fun part of this whole process as well. In addition, just to having a chance to work with all, the CAQ in the way that it's made data available primarily to experimentalists for sure. Right now, only for experimentalists, and then for FAR.
The crux is indeed all in relation to data that are anonymized, because otherwise, you can get incredibly stuck. On the other hand, if I look at the discussion that surrounds our profession, but not only in the Netherlands, we have a public interest role to play. So if you look at the airline industry where you investigate failures, there are other industries where I think we have our act better together if it comes to, looking at failures and how we deal with this. And that's why I think, that as a profession, in our profession, we really should seek in ways to drive this further forward, and because it's also a part of our public interest role.
Robert?
Yeah, I'll just add a final note by, I'm always reminded of that old joke about the guy who lost his watch in the night, and somebody's coming along the street, and this guy's on the ground looking for something, and our Samaritan stops and says, "What are you looking? Did you lose something?" He says, "Yeah, I lost my watch." So they're both down on the ground looking around. Eventually, they can't find it, so the Samaritan says, "You sure you lost it here?" And he says, "No, I lost it over there, but the light's better here." And so we are data-driven. That's the nature of our environment. And so these initiatives, while they may be somewhat long-term by necessity, I think are absolutely critical to keep both the profession and the academy moving forward.
Thank you very much. Let's give a big round of applause to